Yeah, for us to understand better the perspective in which we are going to be analyzing and attempting to predict the direction of price from, we are going to be employing a counter trend trading style, which is the power of three. So we are going to be looking out for a trend, as you can see here. So by the close of the previous week, we are going to be looking at a swing high formed there. Then by the opening of the new week, we are going to be expecting an accumulation, then a manipulation for more buys to the upside, as we know that the market does two things: the market sells to buy and the market buys to sell. So if we are looking out for a sell opportunity, we are going to be looking for a manipulation to the buy side. Then if all rules are met and a pattern is formed, then we are going to be expecting a distribution to the downside after all the buyers are already trapped in the accumulation and manipulation. Then on the distribution, based on the entry model, you can take your entry during the week as the pattern follows. So this applies inversely. If it will be a buy as well, we are going to be expecting a swing low, an accumulation of orders, a manipulation, then a distribution to the upside. So inversely, so if it is a buy, this applies, you just apply this inversely. I hope you understand that. Yeah, welcome to the chart. Money never sleeps and the forex market is a testament to this. As we are aware of in the market mechanics, otherwise known as the liquidity providers concept, we look out for liquidity and trap zones, which are zones that offers the best opportunities in price, the highest risk to reward, and the lowest risk per trade. Right here on the market outlook, we look out for zones where the market is likely going to draw to during the week, and we attempt to have an impression of how price is going to play out, taking into consideration the liquidity zones on the chart. So here we are going to be using the 4-hour chart for our weekly market outlook. So right here on USD JPY, we can see the liquidity zone from the previous week. At the top here we have the high, at the bottom here we have the low. Price closes near to the high of the previous week. However, this high is not a swing. Following from this, when the market opens, we expect a consolidation around this range and for this high to be taken out. So if this high is taken out in a healthy liquidity manner, creating a counter trend formation with candlesticks aligning perfectly, then we can conclude that the US dollar is going to weaken against the Japanese yen. Nevertheless, if price continues to rally up, creating bullish candles more than 3, and price continues to rally up, then we can expect price to attempt to fill out these liquidity voids. However, in this zone there is no strong resistance, and if reverse may be the case and price does not break this high, then we can expect a consolidation for price to tickle down and come and retest a king order block here, or for price to take out this low and give a reversal pattern to the buy side. So those are the possible case scenarios on USD JPY. On USD CHF, we can see, just as predicted last week, price gave a counter trend. However, not much of a strong pattern was given to support this area. Nevertheless, price rallied up. So at the close of the previous week, price closes near to the high. Following from this, you can expect price to range once the market opens on Monday and take out this high. So if this high is taken out in a healthy liquidity manner and giving a candlestick formation that aligns and if all rules are met, we can conclude that the US dollar is going to weaken against the Swiss franc. However, if reverse is the case and price continues to rally up, creating series of bullish candles, then we have no conclusion of this pair and we can expect the liquidity voids around these areas to be filled, and not much of a strong resistance is seen. However, there's a resistance here, so if price reaches this area, we can expect a resistance. Nevertheless, if reverse is the case, we can expect this low to be broken as there is no strong support. This is not a strong support. This is not much of a strong support. And we can expect price to rally down, take out the previous week's low and give a pattern to continue to buy up. So those are the possible case scenarios on USD CHF. On AUD JPY, we can see price closing near to the high of the previous week. So by the market open, we can expect a consolidation and for the high to be taken out and for price to give a healthy formation for a counter trend. So we can conclude that the Australian dollar would weaken against the Japanese yen. Nevertheless, if that does not happen and price continues to rally up, creating series of bullish candle, then we hold no conclusion on this pair. However, price could tickle down to retest some support. However, there is no strong support, so the weekly low from the previous week can be taken out for a counter trend for a buy. On GBP USD, we can see price closing within the range near the low of the previous week, so we can expect an accumulation when the market opens and for price to manipulate down to take out the low from the previous week and give a healthy formation for a buy. That is if all rules are met. However, if reverse is the case, we can expect price to rally up and test a support here as we have a strong support from the high of the previous week and for price to drop. Moreover, if the support is broken, price could break the high of the previous week to give a counter trend for a sell. So the beauty of the market mechanics is that you are able to view the market from the perspective of the buyer and the seller alike, having a flexibility in your analysis and not being rigid. As the market is dynamic, so the market mechanics analysis is also dynamic and flexible and adaptable to the changes of the market. Right here on Euro USD, we can see price consolidating near to the low of the previous week, so we can expect price to consolidate for this low to be taken out. If this low is taken out in a healthy liquidity manner, we can expect a candlestick formation that aligns, and if all rules are met, we can conclude that the euro will strengthen against the US dollar. Nevertheless, if reverse is the case, we can expect price to rally up and come and retest a strong support here as we have a strong support right here from last week. This candle, this bearish candle here, we have a strong support here. However, if this strong support is broken, we can expect the high of the previous week to be broken for a counter trend for a sell. So those are the possible case scenarios. Mind you, if price breaks this low and continues to print bearish candles and it continues to rally down, we make no conclusion on this pair. On USD CNH, we can see price consolidating near to the low of the previous week Following from this, we can infer that price would consolidate, take out the low and give a counter trend pattern for a buy. Moreover, if that doesn't happen and price continues to print bearish candles to the sell side, then we hold no conclusion on this pair. Mind you, if reverse is the case, we can expect price to rally up and break this resistance, as this is a weak resistance, and break the high from the previous week to give a counter trend for a sell. Before we make up our mind that price is either going to buy or sell making a counter trend, all rules has to be met. On AUD/USD, we can see that last week price is in a range, and the beautiful thing about a ranging market, you must always keep in mind that once the market is in a ranging choppy position, once the market is range bound, then what is bound to happen? Then a trend is likely to happen. So next week we anticipate that if this range bound does not continue, AUD/USD is either going to trend to the upside impulsively or the downside impulsively. So right here we can see the support here. This is a strong support, so price could rally down to retest this support to push higher. Nevertheless, if this support is broken, we can expect price to find another support for price to push higher and create a counter trend. If reverse is the case and price rallies up, right here there is no strong resistance, so we can expect this high to be broken for liquidity to be grabbed for a further sell down. You must always keep liquidity zones in mind, because without liquidity the market will not move. Forex trading is a zero-sum game, and what makes the zero sum possible is the concept of liquidity, accumulating contracts from the opposite side and moving away from their direction. NZD/USD price consolidates near the low of the previous week, and there is no strong support here, so we can expect this low to be broken. If it is broken in a healthy liquidity manner, we can expect a further pattern for a buy up. Nevertheless, if price does the reverse and retraces up and breaks this high, then we can expect a healthy formation for a sell if all rules are met. Nevertheless, this is also a range bound market, just like AUD/USD, and AUD/USD, NZD/USD, they are correlation pairs, so they move in a similar manner. So those are the possible case scenarios on NZD/USD, as well as gold, because Australia is the country that has the highest reserve of gold, so it moves in tandem with gold. On USD card, we can see price consolidating near the high of the previous week, and last week ended in a range bound market. Money is made in the range bound market because after the range we have the trend. So we can expect price to retest this zone, break this zone, grab liquidity and create a counter trend formation for a sell. Nevertheless, if price retest and break this zone and create series of bullish candles to the upside, then we will have no conclusion on this pair. If reverse is the case and price rallies down, we can expect this support to be broken, as this is not a healthy support, and we can expect this low to be broken for a counter trend to form once liquidity is grabbed, to expect a sell side liquidity for a buy. So those are the possible case scenarios on USD card. Well, on Euro JPY, we can see price closing near the high of the previous week. So by the open, we can expect this high to be taken out, and if it is taken out in a liquidity manner, we can expect a reversal to the downside. Mind you, just as predicted last week, price grabbed the liquidity of the previous week's low. We already predicted this in last week's market outlook, and price did exactly what we predicted. It took out the low, grabbed liquidity, and price continued riding to the upside. So if price doesn't take out that high, we can expect price to retrace down and retest this zone. However, this is not much of a strong support, but still this is a strong support. We can expect price to break this low and give a counter trend for a buy further up. On gold, gold was in a all-time high and can see price rallying down, attempting to find a strong support, and price consolidates around this area. So from last week we can see a liquidity zone here. So once the market opens, we can expect a consolidation for this liquidity to be grabbed for a new support to form if all rules are met. And if reverse is the case, we can expect price to rally up, retest this resistance and break it further up. However, if this resistance is broken, we can expect gold to grab liquidity and find a new support for a rally further up. So those are the impressions on gold. On GJ, we can see a similar pattern to Euro JPY. So we can expect this high to be broken, and if it is broken, we can expect a grab of liquidity. But if a grab of liquidity doesn't happen and price continues to rally further up, then we hold no conclusion on this pair. However, if reverse is the case and price rallies down to break this support or retest this fair value gap, then we can expect a reversal pattern for a buy. On silver, we can see immediately price broke the high of the previous week, price started ranging and price is trying to find a new support. However, there is no much of a strong support around this area, so we can expect price to consolidate and take out this high for a counter trend for a sell, for price to look for new support. And if that doesn't happen and price rallies down to take out this low, then we expect a liquidity grab for a further support up if all rules are met. Mind you, the liquidity grab and the rules met, it has to align with the timing, it has to align with the technicals, and it has to align with the days. So do the needful to take all those into consideration before you make a decision to either buy or sell. On DXY, you can see price consolidating around this area, so we can expect this high to be taken out for a reversal pattern down. However, if this high is taken out and price continues to rally up, then we have no impression on this pair. Mind you, if reverse is the case and price rallies down to take out this low, as there is no strong support here, however there is a strong support around this area, so price could come down to retest this support for a further bounce up. Nevertheless, if the support is broken and this low is broken, then we can expect a counter trend for an upside on the DXY. But with what we are seeing here, we can expect further weakness on the US dollar pairs, as this is a liquidity zone. This is a buy side liquidity zone for a sell. Or BTC USD, it is already moving in a beautiful manner, consolidating, so we can expect this high to be grabbed and for a further drop down. However, if the liquidity at the top of the previous week is grabbed and price continues to buy up, then we hold no conclusion on this pair. Nevertheless, if the liquidity is grabbed and price rallies down, then we can expect a weakness on the BTC USD. Plan your trade, trade your plan, and most importantly, manage your risk and emotions. If you find it useful, like, share, and please subscribe to follow for more.